In the energy quadrant, WTI crude oil contract nearing 59, getting as high as 58.74. Yesterday's price breakout, breaking out of that sideways channel, has continued to break out to the upside with this rally that we got today. Pretty big move, biggest move in about 4 weeks. And the upside breakout of that 57.65 high that we'd seen, just to show you that the way crude oil moves up generally, when it does move up, we move down pretty consistently, but we move up in patterns of rallies, and channels, and this is the breakout of another one of those channels, getting up into that range. Again, just to show you how sideways the channel was, we basically had 3 up weeks, 3 down weeks over the last 6, and that was that consistency we see in those sideways channels. Yesterday was a breakout, today's a continuation of that. The OPEC report came out, and OPEC production in February actually slowed at a slower pace. What I mean by that is in January they cut over 700,000 barrels of production. February, only 291,000 barrels were cut. Now together that's about 1 million barrels. That's still pretty good. And the pace of the cuts slowing doesn't necessarily mean they're not as committed to those cuts, as you can tell by today's rally, and this week's upside is showing us, as well as the demand side by OPEC remain consistent. So they predicted the same demand they did in their last report. That's not consistent with the IEA, which is releasing a report early tomorrow morning. And the focus on supply in that report stays the same. OPEC apparently telling its members they need to be vigilant in order to not have a return of the oil glut later this year. Goldman Sachs predicting that that oil glut will be gone by April at the current pace. If we continue to see these draws like we saw in EIA, that actually could be the case.